and we're going to talk about Rivian and Lucid results. Omar, how are you? Did you finish the reading?
Yeah, I did.
Did you learn a lot?
Well, I learned that Rivian is going to keep production flat.
Yeah, it's kind of wild, huh?
This was basically the other option that Tesla had, right? So they could either cut prices and grow volume or keep production flat. So they chose to go with affordability. It's kind of interesting that Rivian took the opposite approach. They're just saying, okay, we're just not going to increase production anymore.
Yeah, and their cash balance went down to from 8 to 7 billion, I think, and they're delivering in how many countries? Sawyer, do you know?
Not off the top of my head.
Yeah, Omar, do you know how many countries Rivian is delivering? Is it just US or I think they're doing other as well, right?
Maybe US and Canada, I think.
Yeah, I think it's just those
Um,
two.
They called R2 their first global vehicle in their deck.
Oh, okay. I see. So I mean, the reason why I'm asking that is because I'm trying to estimate the minimum amount of cash they need on their balance sheet to run operations at all. So you obviously need a couple of billion there's right there. So their excess cash, which is a cash balance minus the minimum required cash, is probably like, 4 billion, I'm guessing. 3, 4 billion.
Yeah, looks like they're forecasting adjusted EBITDA of negative 2.7 billion in 2024 and 1.8 billion in capital expenditures.
Can you say those numbers again, please?
$2.7 billion in adjusted EBITDA loss and 1.8 billion in capital expenditures.
Yeah. Yeah, that's wild.
So they're planning to burn through basically half their cash this year, assuming no new financing.
I mean, do you think they're going to be able to raise?
You know, it's really crazy the sort of roller coaster we've been through with really the market appetite for EVs. Where really Rivian had this monster IPO where they were able to raise $17 billion in cash. And I mean, can you imagine going to the market and asking for $17 billion for an EV startup today? The market has just done a complete 180 in terms of their sentiment on EV startups. So maybe things would be different 12 months from now when they do decide to raise, but it is definitely a big reversal from when they IPO'd. It wouldn't be as easy as their IPO, that's for sure.
Yeah, I mean, I don't think they have that much time. I think they have to raise right after this event. So this event has to go extremely well for them.
Yeah, I mean, it seems like it could help a lot if they had a type of Model Y product that they could sell globally and they
Yeah,
could
so
capture.
let's talk about that for a second. So this R2 vehicle is supposed to be a Model Y competitor, as I understand it. What does it offer that Model Y doesn't?
I don't know. I haven't seen the unveil yet.
Right. But no rumors, no nothing coming out from the company or fans or anything. What does R2 offer that Model Y does not?
Oh, well, I mean, Omar makes a good point. We haven't really seen it yet. I think it'll be similar to what, let's say, the R1S offers that the Model X doesn't. And it's just like it has certain features, design points, certain things of luxury, outdoorsiness, off-road features. I think RJ said a couple days ago in an exclusive interview that he felt like $48,000 was a good price point for an EV. So that tells me that maybe that's the price point they're aiming for the R2, and that would put it, in the Model Y price range as well. So that makes sense to me.
Yeah, I mean, they still have to offer something that Model Y doesn't because they're going to come in higher than the Model Y price. And the Model 3 Highland is an incredible vehicle, the upgraded Model 3. So that's obviously cheaper too. So yeah, I don't know. I mean, they don't even have FSD sort of thing. So yeah, I'm not sure.
I mean, I think they've got some fans who like their vehicles who'd maybe take a look at it. The R1S is really kind of a more boxy traditional SUV shape, which I think appeals to some people over the Model X. So maybe they could have something that's a little bit of a different design that isn't necessarily just a clone of the Model Y, but tries to take it in a different direction, tries to fill some niche that they feel the Model Y hasn't addressed. And they've had some success doing that in the past. They go where Tesla doesn't, right? Tesla didn't have a pickup. They did a pickup. They did a van. They did a more boxy sort of SUV shape. And that's kind of been their playbook. The concern for me is really okay, we've seen with the Model 3 ramp how perilous this can be to really have a mass market vehicle, to make the capex investments needed to really make a vehicle at scale that you would need for a $50,000 price point or a $48,000 price point. So, can they get the new factory in Georgia up and running? Can that all go smoothly? And can they ramp this thing smoothly when the capital market environment is not necessarily as easy as it was when they started?
Exactly. It's day and night right now. I mean, they raised tens of billions of dollars at extreme value. I think their highest market cap was $150 billion.
Yep.
Yeah. So lots of excitement around EVs. That is not, people are questioning the growth rate, even though, as Omar points out, the growth is still healthy. And by the way, Omar, Autoline, John McElroy also pointed out this morning. All these people are talking about EV growth rate going down, but still growing. So it's just the legacy automakers are canceling plans. But Rivian obviously isn't going to be benefiting from 0% interest rates. People rushing in to find the next Tesla. So they're in a tough situation. Sawyer, how did their margins trend this quarter?
Not great. At least for their gross margin was 46%. That's worse than the 36% it was in Q3 and the 37% it was in Q2 last year. And then their gross profit per vehicle delivered was negative 43,000. That's worse than the negative 30,000 it was in Q3 and the negative 32 roughly it was in Q2.
Yeah,
Um,
somebody asked in the replies, how is that possible if they're growing production? And I think one way it's possible, I'm not sure if this is the case, but I think the ASP must have gone down, right?
no, ASP went up,
Oh,
interestingly
okay.
enough, which tells me
So
they
then,
delivered fewer delivery vans, probably.
okay, so ASP went up and, lithium costs are coming down, nickel costs came down substantially as well, and their production is up, so capacity utilization up. So then how did their margins go down?
So it's in their slide deck. I'm trying to find the exact spot because they talked directly about this. There were some one-time costs, one-time things, I guess, that contributed negatively, like 5,000 per vehicle. I think it was like some supply chain things and a couple other things. But I guess that won't be an issue in Q1, it sounds like.
Omar, did you have a quick take on why their
Oh, I found
margins
it.
went down further?
Tesla, in a word, Tesla, right? I mean, it's really an industry wide trend, but it's tough when the 400-pound gorilla in the room is just making their EVs so affordable, right? And you got guys like Gary saying, hey, this strategy is just so stupid. You're not getting anything from it. Everybody's just going to cut their prices. And there is some truth to that, right? Other people are going to have to also discount to move inventory off the lot. But you look at Lucid, production declining. You look at Rivian, production staying flat. These are competitors that were growing and eating into their share. As a matter of fact, they say in the deck, we have the top selling EV over $70,000. So they're essentially saying, look, we're actually outselling the Model S and X. And you could say, well, okay, Tesla's focused on the 3 and Y, but that is, you know, you got to give them credit at least for that, right? So here's a company that was growing, that was potentially a threat to Tesla, and this strategy of affordability has stopped these competitors dead in their tracks. And that ultimately means that whatever market there is, Tesla's probably going to take more of it.
One sec. This
Hmm.
claim that they have the best-selling AV over $70,000 is so disingenuous because the only reason Model X isn't selling double or triple what it would is because of Model Y. Okay, so that's a little, that's the kind of stuff that, like, anyway. Sawyer.
So Rivian said during the fourth quarter, costs of goods sold were negatively impacted by 70 million, or approximately 5,000 per vehicle delivered. These costs include supplier-related expenses, accelerated depreciation, and other expenses primarily related to new technology and design changes going into the R1 platform. While we could incur additional costs associated with our planned shutdown and technology and design changes in the near term, we do not anticipate these costs to be part of our normal business course of business in the long term.
What would the margin be without those costs? Without those, I
Mm,
mean, they claim it's one time, but all managers claim things are one time that turn out to be just one time sequentially,
about
repeatedly.
negative 38,000.
Yeah. Wait, negative 38,000 gross profit per vehicle?
Yeah.
Gotcha. So it's still negative and deeply negative. Yeah.
The funny thing is, they're actually the one that's doing well out of the two companies we're discussing today.
What do you guys think about that? I was sort of thinking back to the days. I remember when I was, following Tesla and Apple and Netflix in 2017 and 2018. I always felt like Apple should have purchased Netflix back then, and obviously Apple had a chance to buy Tesla, but Tim Cook didn't even take Elon's call. I feel like Riven fits really well into Apple's brand and what they try to do. I mean, after hours, their market cap's at 12.5 billion right now. And Apple's really been struggling to get a car going. Maybe it's just because the autonomous features they're trying to put into it. But they have a huge cash hoard, obviously. So maybe I wonder if like it would make sense for Apple to just purchase Rivian. Maybe not, but because they seem to like to do
Yeah.
things on their own.
I mean, it's an interesting thought. They certainly have not had much progress in getting Titan on the road. I mean, how many years have we been reading about those stories? And it seems like the manufacturing is really a primary sort of issue there. But on the other hand, large acquisitions aren't really Apple's style. I think the Beats acquisition at 1 billion was the sort of largest part of it. And when you really think about the acquisition price for Apple, need to look at not just what it costs to buy the company in terms of cash and equity, but the debt and liabilities they're going to be assuming. And when you have sort of stagnating sales, and then you kind of add on this sort of massive cash sink. I mean, Apple obviously can afford it, but it hasn't really been their style to ever do large acquisitions before. Like they would rather, to your point, make Apple TV Plus and do their own original shows that are their own style rather than buying a Netflix or somebody else.
Right. Looks like Apple had 166 billion in cash on hand at the end of Q3.
Yeah, so first of all, the price wouldn't be 15 billion because they have lots of cash on the balance sheet. So Apple would only pay a few $1 billion to buy Rivian. And I don't think they have debt, if I remember correctly. I haven't looked at their financials lately, but um, so it would be only a few $1 billion purchase price. But the thing is, what are you getting for that price? What does Rivian have that Tesla does not? What does Rivian do better than Tesla? So even though the price is cheap, the value is even less to Apple, in my opinion.
Yeah, if I were honestly Tim Cook and I had to buy Rivian or Lucid, I might honestly buy Lucid. It might be a better deal and more conducive to what they're doing. And they could probably strike some deal with the PIF.
Interesting.
And I think Lucid actually has better technology than Rivian. Like Lucid has developed more stuff in
Right.
house, whereas Rivian, buys a lot of stuff off the shelf. But ironically, their success in the market has been opposite to what you would think just looking at their internal technology.
Yeah, exactly. I agree completely. I mean, even like Lucid's motors, I think electric motors impressed Sandy Munro quite a bit, right?
Yeah, they're really good, really efficient, really tiny motors. So that's some really good stuff there. You know, they did do the deal with Aston Martin, but they really need a deal with like a Toyota or something, not an Aston Martin.
What's Rivian's after hours? They were pretty volatile. They were actually up like 5-6% first.
It's probably because they didn't hit the guidance part of this
Ye-
deck.
Yeah. I
I mean,
mean,
Yeah,
that's a huge miss. Like the street was expecting 80,000 vehicles delivered this year for guidance, and they guided for 57. That's a huge difference.
yeah. Dustin says Rivian has 1 year runway, but I think, yeah, I don't think they have 1 year. And then because I think the reason is because people are underestimating how much cash you need on the balance sheet to run operations. They need a few $1 billion. So the excess cash is only a couple $1 billion. And Ayeted says Rivian will easily raise dollars, but I don't think so. I think the environment, the financial environment is much different today than it was. And I don't know what they're going to show with this R2 event, but we'll see, I guess.
they can raise. It won't be on great terms, but they can probably get Amazon or one of their other investors to lead around and, you know, go to equity or bond markets.
Well, they did that a bunch of times, right? And this is not their first time raising cash from a weak point. Chris says some companies build themselves to be sold. Could be interesting.
So back in October, Rivian said they plan to issue 1.5 billion in convertible debt. And then in total, they said they plan to issue 15 billion of debt for their Georgia plant.
Let's see. Let me look at their balance sheet real quick. They haven't
So
made any major investments to their R2 plant, right?
I think they've started building it or are going to soon
Well,
start.
starting building the walls is one thing, but then the equipment capex is really what matters with these
Yeah, they're
factories.
not there yet.
Yeah. They're probably going to want to see what the demand is like.
But if they had 7.9 right now, and then you include that 1.5, it's like a little over 9 billion.
Oh, another reason why their margins went down is because their deliveries went down sequentially, right?
I don't know.
Yeah, September, so third quarter of 2023, 15,564, and then December quarter, 13,972. So that's probably the primary reason. Oh, do you remember they said something like Amazon doesn't take vans or something in the last like Christmas weeks or something?
Yeah, there was an issue with that. Yep.
Yeah, yeah. Okay, so and then they laid off 10% of their salaried workers, right? Did they lay off or did they announce plans to do so?
I think plans.
Okay, so that will be in Q1 results because their R&D expense is pretty much as high as it's ever been, and then SG&A is the highest it's ever been. So they're not even doing well on the cost cutting front either.
Yeah, it's a smart move. 10% layoffs. If they're going to keep production flat, this year's going to be all about bringing down costs. Like what they really need to do, that Tesla kind of did, is they had a couple quarters where they posted profitability for the S and X before ramping 3. It was symbolic. The company was obviously still at a huge net loss historically, but it showed the market, look, we can really get this to be profitable.
Right,
If
exactly.
and they need to really do that. I'm not sure they can, but that would maybe help them raise money.
Okay, so they also have short-term investments, by the way, $1.5 billion. So their total cash and cash equivalents plus short-term investments, which I'm guessing they're probably like T bills, probably, yeah. Cash equivalents are more like money market, right? So you're gonna get $1 when trade that, sell it. Um, Short-term investments are like anything less than 1 year maturity. And in Tesla's case, they are treasury bills. And I'm guessing that's probably what it is for Rivian as well. So you can count that as, I mean, unless you have any confidence issues in the US government, you can count it as cash. So that's $9.4 billion they have. Okay. And then they have $2.6 billion of inventory, and they can probably liquidate that or something too if shit hits the fan. So let's say they have about $10 billion of cash, and then accounts payable 1 billion, accrued liabilities 1.1, so that's two, so 900 million, sorry. So that's 2 billion, 10 minus 2, 8. And then they have long-term debt of $4.4 billion. Yeah. Okay, so they took on a bunch of debt, like you said, Sawyer.
What I just realized is Rivian's now spending 50% of what Tesla does on research and development. I mean, when you think about all the things Tesla's working
Right,
on, that's
exactly.
pretty incredible.
Yeah, the other thing I would caution is there's really not much in terms of accounting guidance on how you classify expenses. And
Yeah,
so
that's fair.
yeah, so they might be classifying things into R&D segment because they know people are looking at gross margin. So that's also possible as well. So operating margin is really what matters at the end of the day. But we have Tesla Yoda in here. Tesla Yoda, would you like to say a few words about Rivian?
Yeah, I was just gonna say, sometimes too much funding might actually be a bad thing because it would allow the organization to not have that um, that we must drive super hard or die mentality. And so sometimes when you get these external investors that seemingly have deep pockets like the Amazons or the Saudi funds, um, I think the teams would get that temporary relief and actually slow down. So it may not be a good thing. Um, and then let's not forget it really takes a ruthless um, sufferer or ruthless leader who loves pain to get an auto company to profitability. And I don't know if um, the CEOs at Rivian and Lucid are at that level. And I believe Ford and Tesla are the only companies that have not gone bankrupt in the auto industry. So yeah, getting funding is one thing. I think that's kind of the easy part, and then now you have to source the 10,000 the tens of thousands of parts and to produce the product and ship the product. That's basically where the rubber hits the road.
Well said. Exactly. We have a question. I know my answer to this question, but I'm curious about you guys, what you guys would say. Marty Party in live chat asks, would it be wise for Tesla to buy a Lucid or a Rivian if their market cap gets attractive prices? What do you guys think?
That'd be a terrible idea. There's no need.
Yeah, not for Tesla. I mean, they'd really be an attractive target maybe for a legacy automaker, but really it's a lot of liability to carry, right? You see this business that's burning billions of dollars a year. Do you see it and think, hey, I'd love to be burning those billions on my balance sheet instead? So that's really the big issue. I mean, a legacy automaker would certainly love to have the assets of a Lucid or a Rivian, no doubt about it. But they're not really doing that well financially either.
Neither has in-house battery plants, right? So what would a Ford or GM would be buying, even if they bought Rivian or Lucid?
The brand, the factories, um, the customers, the vehicle really, and the liabilities.
So could Ford or GM, let's say, if they bought Rivian and they buy the factory to build the R1 vehicles, which are currently unprofitable, is there anything that the legacy automakers can do to turn those vehicles profitable?
Yeah, absolutely. They can redesign them to use their existing parts and supply chain and maybe bring the cost down considerably. They can fire departments that are overlapping in their company. They can fire the marketing department or bring them into the fold of the parent company, that type of thing. So there's certainly cost savings to be had. How much? I don't know, but it would really change the company. It would probably, hurt morale. And it's essentially like the death of a company in some ways if you choose to go that route and sort of get rid of the individual functions at the brand.
Yeah. So Rivian's in 2023 SG&A was 1.7 billion. Let's assume we remove all of that because that's basically admin stuff that you already have in house. You have your accountants, you have your lawyers, you have your CEO, etc. 1.7 billion. And then R&D is 2 billion. Let's say somehow you cut that in half. You're still left with your negative gross margin of 2 billion per year. And Omar said maybe you can leverage your own parts. I don't know the engineering if that's possible, but that's a big ask, I think.
I'd be curious to get you guys' opinion on page 14 of Rivian slide deck. They say we expect to achieve a modest gross profit in the fourth quarter of 2024. I mean, I really hope Rivian survives, but I'd personally be shocked if they achieve that.
I mean, a gross profit would be great, but even then, they're probably still losing money as a company overall. So, I mean, like, the gross profit's like the bare minimum. The fact that they're not even gross profit positive means they're selling $20 for $10. They're selling a higher content of the vehicle for more than it costs. So, in order to become gross margin profitable, they either have to gain a lot of economies of scale, a lot of ramp efficiencies, or decontent and simplify the product in a way that might make consumers like it less. Maybe you take away that flashlight or something that you think you don't need. So, I mean, gross profit is kind of the bare minimum. If they can't even achieve a gross profit by Q4, I mean, man, I don't know what I would even think as an investor.
They don't have until Q4.
Yeah, it's a good point. Like if they've got, this level of capital outlay already and they're planning to ramp R2, they don't have more than 18 months of runway, which really means they need to raise within the next 6 to 9 months.
I'm pretty sure they only have 6 to 9 months. So look at this. Loss from operations. Okay, 2022, 6.8 billion. 2023, 5.7 billion negative. So they went like 20%, 15% of the way they were supposed to go in 1 year. And they have 2 quarters, 3 quarters left. And they have their lowest ASPs now, right? They're offering some insane leasing deals to clear inventory. Even with that, they decided to lower production guidance. I mean, a lot of analysts were expecting 70,000 production guidance. Even Gary Black was expecting, I think, 70,000 production guidance, right?
Yeah, it's a stunning strategic choice to keep production flat. And this is really about maintaining the price of the vehicle. So they could easily expand. They just would have to lower the price a little bit. And they definitely have more demand for their vehicles. But I think they said, look, we don't want to be Tesla. We don't want our customers to kind of see the price going down. We don't want to just sort of be playing into this race to the bottom. We can't afford it. We're already so negative on our gross margin. How are we ever going to achieve a positive gross profit if we keep cutting prices in order to grow volume? So their only choice was to keep production flat. Now, the question in my mind is we've got the Cybertruck introduced now. Can they even maintain flat? I mean, I would think they would. People seem to like their products, but it's definitely not a sure thing, especially depending on when those rate cuts start coming in. If it's, June or something, that's probably a little better. If it's September, November, then that's going to be a little bit tougher.
Yeah, I think what they're trying to do here is it's basically a Hail Mary. They have this R2 event coming. And it sounds like they're lowering their growth. Obviously, they're lowering their growth plans to show a good Q1, as good as they can squeeze out. They're laying people off, and they want to show as good of a bottom line as they can, and then go to market to raise some capital. And hopefully, by then, the rates are lower, markets are higher, etc.
Yeah, this could be the most important pivotal moment in the company's history. If I'm RJ, I'm going out there. I want to be channeling Elon Model 3 vibes, right? That's what I want to be telling the market. Okay, hey, we've been burning a ton of cash, but this is our Model 3 moment. This is the car that's going to change everything for the company, that's going to lead us to profitability. And if you can get the market to believe that, then you just may be able to gin up some extra liquidity to get you through the winter.
The difference between the R2 and the 3 is that the R2 will be an SUV, which is the most popular vehicle segment. So I think they're unlike, Lucid, who just entered with a sedan. I think Rivian made a good choice by entering with trucks and SUVs.
Yeah, holding production and deliveries flat is no way to get to profitability. If you look at the charts from Tesla, um, uh, in 2016, Tesla delivers 76,000 units. Then 2017, 103,000. The following year, 244,000. 2019, 367,000. 2020, 500,000. So that's the year where they turn profitable, and you can't hold your vehicle delivery numbers flat to achieve that. That's not how this industry turns a profit. And so I think one path they can look at is the volume required from Tesla's history of how they can have their Model 3 moment. And again, I think a lot of why Tesla succeeded and made that turn was the tolerance of pain from leadership down. And is RJ willing to endure, and is the leader that can go through that? I'm not sure. Remember the tents that Tesla put up um, as a Hail Mary, right? Yeah, so that's what's ahead of them, I believe, to profitability.
I agree with you, except that I think that had to happen 2 years ago, 3 years ago. And it's too late, too little, too late, in my opinion.
Can we get
Yeah,
Jeff and Gurgavin up?
Yeah. Yep, I sent Jeff an invite, and Xander and Gurgavin, they're welcome to join the speaker board. And if there are any questions about Rivian or Lucid earnings, especially if you have any bulls, any investors in the audience, they're welcome to come up as well and argue the other side.
Omar, you said that Lucid's ASB was like 90,000.
Yeah, I just took their revenue and I divided it by the unit. So there may be some technology revenue in there, like supplier to Aston Martin or whatever, but that should be pretty close to what it is.
What's interesting is like Rivian's ASP was 94,000 in Q4,
Wow, no
up
way, really?
10%.
That's
Yeah,
crazy. Wow.
it's higher than Lucid's, which is so you makes you wonder why isn't Lucid having more volume? I know that it's a sedan and
Yeah.
everything, but still.
Yeah, that's a really incredible stat. Good catch there. And I always still think of the Lucid Air as the $180,000 car. Like, what a different market we're in now, both in terms of the equity market and in terms of the car market, where the same car that was a $180,000 car is now starting at $70,000 and has an ASP of 90,000, half of what it used to be.
Yep.
I mean, the other thing is Lucid obviously has, Model S competition, whereas Rivian doesn't really have a large SUV competition, right? If you want a seven-seater, you don't really have an option to go with except for go with R1S or Model X, but the Model X
Model
was
X is
very
more of a
pricey.
crossover.
Exactly. Jeff, welcome. How are you?
Hey there, good. How's everyone doing tonight?
Good. Have you had a chance to look at their results?
Yeah, I looked at Rivian a bit, and not as much Lucid. I'm really trying to like mentally block Lucid out as much as possible. I was in NVIDIA. I got in at 15, 16, and 19 and rode it up to 25, and then I got out, and I've been out ever since. So, yeah, I mean,
You sold NVIDIA at $25?
20, somewhere between 23 and 25, yeah.
Wow. How do you feel about that?
Better now, yeah. I mean, it wasn't a huge position. It was more of just putting a trade on because it looked like it had a little bit of a pattern between 15 and 25, and at the time, like you saw 6-8 months ago, a lot of analysts were like, "Hey, this looks like they're on a good trajectory," and yeah, the COGS miss in Q4 is kind of a big deal. They're saying it's a one-time issue, but I mean, that's a $5,000 miss per vehicle is big. And I wonder, like, we don't get a lot of data from them in terms of the split of R1T and S. But I'm wondering if like they're starting to run into an inventory issue now with the pickup, because I know when the SUV launched, it was pretty popular and it was selling through and pretty brisk pace. But I think they make a good product. The question is are they going to be able to connect the dots between now and in their cash burn? They're going to figure it out. So I know RJ's on CNBC tomorrow morning. Hopefully they ask some reasonably tough questions and try to, because they were at like minus 31 or 33K per car, and it looks like they were promising to like cut that down, and it looks like it obviously went in the other direction. So where does this leave them now? And in a flat year, if they're going to be flat in volumes this year, that means they're going to have to get their COGS reduction. They're not going to be able to gain a lot of efficiencies per se, because they're kind of running at their peak rate right now for the year. It's more of they're going to have to get those efficiencies out of like major design and process changes for how they build a car. So those are more difficult to do, but if you have a couple of them queued up and they're a decent size, like going to LFP, for example, like they can have a pretty sizable impact on COGS.
Do you think it was a strategic error for them to have a customer like Amazon, i.e., having a client or customer that they need to deliver on, specifically, the van, obviously for Amazon, that forces them to not be able to be as nimble or be flexible if they were building their own products without a customer from such an early stage in their life cycle?
Well, I think there's two. That's a good question. I mean, I think there's two sides of it. One is you have an outlet that's not consumer, whereas Tesla was all direct to consumer, basically from day one. So to have that extra outlet is good. The problem is, and what I heard, what happened in Q4, and maybe a little bit in Q3, but Q4 is that Amazon I guess they had flexibility in their contract to just push vans out and say, look, wait, we don't want this many. Amazon's really tightened the belt on their earnings, and they're kind of running a much tighter ship. So it sounds like they had enough flexibility to basically push out some orders. And I don't know the exact quantity, but I know Rivian flagged this once before of, that, hey, these guys pushed out. And so that's something in the contract that where Amazon totally has the upper hand on them. And that could kill you. When you're a startup and you've ordered that material, you've got a very small operation, you've hired the labor, you've got the CapEx, and they don't take the product, that's a killer when you're in startup mode. So I think that hurt them for sure. So, and I don't know if the Cybertruck has had any impact on the R1T or the price reductions on the F-150, but there's a number of things out there. But I mean, they're at the core of it. I mean, they're making a good product, it looks like. But I think part of making a good product is also figuring out the unit economics. And, it feels like Tesla has figured out how to make Model S and X for somewhere on the order of like, $55,000 to $65,000 to make that vehicle. And and obviously Tesla has all the scale behind it now and so forth, but I just don't think Rivian has ever figured that out. And it looks like, they're closer to $130,000 a vehicle right now, at their scale. So, yeah, they're obviously they're two companies at massively different points in their trajectory, but I would have thought, to answer your question, that having that additional customer would have been a nice option for them and allow them to, to scale with some more surety. But it sounds like Amazon just had the ability to push orders out. So
Yeah, that's a good point. It definitely seems like a good thing, but I feel like it's very restrictive, because if they do determine that they want to change the architecture in a certain way throughout the development and the ramp up of that vehicle, they do have to vet it by Amazon, or whoever their customer is, and that just slows them down. And so yeah, think of the 10,000 parts that after pencils down, you are having to make necessary changes because there's insights as you start to build the tooling, etc. All that has to go through your customer for approval, likely. And so, yeah, I just feel like sometimes for startups, you want to build the product for the end customer, and in this case, it's Amazon. But it really pins you down to be not as flexible and not to be able to pivot. Whereas in Tesla's case, if midway through development they feel like something with, let's say, the Cybertruck is off base, they could push it, they could delay it, they can go back to the drawing board much more flexibly.
yeah, no, it's definitely true. You want to ask the question too: is there something going on with the performance of the van? Like, is it meeting like true, like real world efficiency expectations? Does Amazon love it? And if it was a net, because obviously Amazon's doing a sustainability push, but if it was a net cost reduction, you'd think they'd be pulling these things in versus pushing them out. But you never know what's going on in these situations. Like in the Hertz situation with Tesla, if you actually listen to the Hertz CEO talk and like the words come out of his mouth versus like trying to hear it through Jim Cramer's mouth, the Hertz CEO basically said, like, we ordered too many cars and we need to offload our fleet. Like that's a planning problem. Then all these other superfluous things came up of like, yeah, they're, when you get a dent, it's, it's harder to repair or whatever. But, anyway, it's interesting to find out like what happened in that portion of the business, because I think that the push out of those vans would really hurt them economically when you're a startup.
Jeff, what do you think is the likelihood of bankruptcy for Rivian in the next 12 months? And then I'm going to ask the other speakers as well.
I need to go through their statements to understand the most recent burn rate, and I'd have to go through it to answer that question. And I do have a comment later about the R2.
Yeah, they're burning about $1 to $2 billion a quarter, and they have about $10 billion of cash and cash equivalents and short-term investments, which I'm guessing is treasury bills. So, but ask me any facts you want. I have the statements in front of me.
Yeah, I mean, you never want to get obviously close. So yeah, it'd have to do a capital raise, I think, pretty soon. And I think their burn rate is going to go a little nonlinear again, right? If they're bringing up this Georgia factory, and if they're doing battery assembly in there too, I'd have to think that that's going to be a pretty nonlinear burn rate when that comes up. And by the way, I think that's a total disaster for them as a young startup to bring up a new factory and new product. They already went through that pain with the R1T in Illinois, which was actually an existing auto plant. Now they're doing a greenfield plant in Georgia. I would not do that if I were them. from a cost structure perspective.
Yeah,
And
but
yeah,
I don't. I mean, I think what they're doing so far is just kind of putting up walls, and really, the real capex of a factory is the equipment. And I think they're going to want to see how the R2 event goes and what the capital markets are like, etc. So they can adjust that timeline, the massive capex layout,
It's
if
a
they need
huge
to.
risk,
But are
though.
they really going?
It's a do or die
But the
moment
question
for
is,
them.
exactly, the question is, are they going to even get to that, optionality?
yeah,
So that's why I'm asking for the next 12
yeah, because
months.
Tesla chose a tent, outside of an existing factory that already had labor that was trained and everything. And that was a super risky thing. And it turned out to probably be the right move and definitely the right economic move. But yeah, this new factory, new product, and you're on your last, throes of capital. And so yeah, anyway, it's it's a bit concerning. But yeah, if they get some big, and here's the thing, here's the thing. Why would you have to think like it's either they get a capital infusion or somebody acquires them, right? And then who's going to acquire them and why? It'd be the other conversation. But I guess yeah, finish your.
Ok- Okay, so did you give a probability or not for the next 12 months?
I mean, I don't think they're gonna. I don't think they would go bankrupt. I think they would get acquired or they'd get a capital infusion. But if they did neither of those, they would go bankrupt within a year.
Yeah.
I mean, $8 billion
Does everybody?
is quite a lot of money, but they're just burning a lot of money too.
Yeah, the more they build, the more
Does
they
any
burn.
Sawyer, Yoda, do you guys agree with what Jeff and Omar said?
Yeah, I
Or
I think there's a
any?
high probability that they would just raise more money and they'd be fine.
You know what I find fascinating is they used to have so much more liquidity than Lucid, but Lucid reported just under $5 billion of liquidity, and I think they're at 8 billion. So the gap is really narrowing in terms of the relative liquidity of the companies.
Yeah, Rivian had 20
Sawyer,
billion, I
you're
think.
saying Sawyer, are you saying your base case is that Rivian will raise money and be fine?
Yeah. Hmm.
Okay. Yoda?
Yeah, maybe one of the key financial ratios that's a leading indicator for bankruptcy risk is the debt to equity ratio. And there may be other ratios, but it'd be interesting to compare their ratio for debt to equity um, of them today versus, let's say, 2008 for Tesla, and just to see on those key uh, ratios how they fare. So, I don't have the numbers right now, but that could be an interesting exercise. The other thing to look at is what is effectively bankrupt. So my guess is they're not able to invest at the level for things like AI and autonomous driving technology with their current financials. And so you could sort of look at, you know, going forward, what are some of the areas they will no longer be able to compete? And I think AI is gonna essentially take a back burner. And so you could see how Tesla's vehicles will be so much more advanced with their investment compared to Rivian that I believe the Rivians will have to license FSD or a competing or equivalent AI technology. They cannot afford to develop their own.
I posed a poll at live chat, and then the answer kind of swung from one side to the other. And the question is, should Tesla buy Rivian if price drops to $1 billion? So, sorry, if you could give 1 billion from our cash pile and buy the assets of Rivian, would you pull that trigger?
Well, I don't even think the price matters per se. It's more just like how much are they burning? What's like the runway look like? Because you could buy them for like $1, but if they're burning like $1 to $2 billion per quarter, that's not really all that attractive for Tesla. Even though Tesla has 30 billion in cash, I don't know if it'd be
Yeah,
much of a
Jeff,
value add.
yeah, Jeff,
No, I wouldn't.
yeah. So I mean, if you guys think that Tesla shouldn't buy, do you think then Rivian has value to another automaker at
Elon just
$1 billion?
commented on Sawyer's post. Their Saudi sugar daddy is the only thing keeping them alive.
That's funny.
Uh, yeah, well, it's true.
There's a great
It's true.
GIF for that, by the way. I have one.
Man, the CEO made so much money. It's crazy. Like that company is, no one wants the products. The stock is down like 95, 99%, whatever it is. And the CEO made how many millions of dollars?
300
360.
million stock-based comp. It's actually
That's
funny.
so
On
crazy.
their deck, they actually called out. They literally have the like logo of the Kingdom of Saudi Arabia in their earnings deck, and they're like, "We have received over $5 million from our sugar daddy, and with 59.8% ownership, the PIF has invested 5.4 billion since 2018 and shown a track record of support, demonstrated support from our major shareholder." So they're like they have a whole page on the deck about liquidity and just trying to calm investors' concerns about this. A track record of prudent liquidity management. Really? This is prudent liquidity management? Opening the world's first car factory in Saudi Arabia, that's prudent liquidity management. You had to be the first? You wanted to be in the Guinness Book of World Records or something? You're going to open a car factory in one of the worst locations to open it in just because that's who your majority shareholder is?
Yeah, exactly.
Sounds like a tax write-off for the oil business.
I mean, I guess you got to do what you got to do to, I don't want to say, I don't want to finish that joke. Anyway,
The
you guys want to talk
average
about something else?
Lucid service center and store sold 38 vehicles a year, or approximately, one every 10 days. So things are quiet if you're a showroom employee.
I actually knew someone who used to work as a sales advisor at Lucid, and he was literally like, nothing ever happened. So then he went to Rivian, and now he works at Rivian.
All I see on my social media apps is Lucid Air advertising.
Well, guess what? You could get the Pure for only $70,000 now. Do you want one?
Oh yeah, let me jump out of my seat. I'll trade in my 2012 MacBook Air.
And I'm just looking at the Lucid board. I don't recognize anybody. Anyway, just interesting board.
Well, at least they didn't nominate the Diesel brothers. That's another funny EV startup story we didn't talk about. The Diesel brothers released this video and they're like, the Nikola Badger is real and we're going to make it. So the Diesel brothers literally bought the assets of Nikola, like the Nikola Wave Runner and the Badger, which is nothing, some intellectual property, some Photoshop sketches. And this Diesel brother guy, Heavy D Sparks, he's got like a Cybertruck on tracks too, which was kind of interesting, but they've literally bought it and they're starting a new company called Ember. And they're like, Trevor shouldn't have gone to jail. He didn't lie. This is all just like a big misunderstanding. And then Trevor nominated him to join the board. And Nikola shareholders rejected his board appointments. Management said they showed a shocking lack of experience. But yeah, they're going to try and actually make the Badger a real thing.
Elon
So,
just gave his thoughts on Rivian in the same thread. He said,
yeah.
Current trajectory has them bankrupt in 6 quarters. Maybe that trajectory will change, but so far it hasn't."
Wow. So pretty spot on with what Yaman was saying. Yaman was saying about a year. Elon's giving him 6 quarters. Let's see if that prediction
I'll
pans
bet
out.
him. I'll bet him coffee. It's not going to be 6 quarters.
I guessed 5, but
Yeah.
I mean, he's saying
Cash on
current
hand.
trajectory, but that doesn't account for R2.
Yeah, he says maybe that trajectory will change. But the thing is again here, 7.9 is the cash balance, and you have to kind of adjust for the minimum cash required. So, you can't run a company like that at zero cash, obviously. So I think it's going to be about $1 to maybe $3 billion of minimum cash. So they really have about 5, 6. But then they also have the short-term investments, the T-bills, I guess.
You think Elon's secretly listening to the space?
Maybe. Hi, Elon.
I would, if I were him. I would. But can you imagine if you founded a company and there's a 24/7 space going on, basically, for like 2 years? Would you not want to listen at least? I would want to listen, just to kind of see like what's going on.
Yeah, be curious.
Or maybe he was just thinking about Rivian and Lucid earnings at the same time.
Exactly.
Well, I was just
Or
going to
is
ask,
it?
if you guys listened to the last one or two earnings calls? Like, was RJ forthcoming about demand basically flattening? I didn't heard that.
Well, Sawyer just read a sentence from their release and said they expect to do, what was the word they used, Sawyer? Was it meaningful gross profit
Uh,
or modest gross
just
profit?
achieve
Modest
a
gross.
gross profit in Q4.
Yeah. We expect to achieve modest gross profit in the fourth quarter of 2024, they say.
I mean, I was listening to this How We Build This podcast, and RJ was on, and he's like, "Oh my God, RJ, you have so much demand. You have people waiting months and years for a product." You look at it today in their major markets like California, delivery in 1 to 2 weeks. And you scroll their inventory page, you can just scroll forever. I don't see the end of it. So now they started offering lease deals. They offered it on the R1S, the R1T, and they're pretty good lease prices overall. I think they've given a lot of sort of incentives for people to buy. And that's kind of why they're stopping production. They either had to lower the price or keep production flat. So they've tried to keep production flat. They could maintain the same sales, right? They're not going to grow because their production's not growing. So we know that they physically cannot sell more cars according to their guidance, according to what their production plan is. So they're either going to stay flattish or shrink or maybe surprise a little bit with a modest beat. But when your company's priced like a growth stock, can you maintain that growth stock valuation without the growth? Right? And people make fun of Tesla for going from 80% growth to 40% growth. They call that, this huge slowdown. Well, they're guiding for 0% growth.
Rivian said in their slide deck, they said our order bank has notably reduced over time as deliveries more than doubled in 2023 versus 2022, and we have incurred cancellations due to macro and customer factors.
What? Macro isn't real. I was assured by some very smart Tesla investors.
I haven't seen any ads though.
I mean, some ads could help, honestly. I think Lucid's been running some ads to Yaman, but um, yeah, I don't know. I mean, it's a tough market to be in right now. Everybody's cutting prices. There's tons of deals. There's tons of inventory. It's just a tough position to be in. Honestly, you can't envy them, and they're probably doing pretty good, all things considered, when you look at the environment we're in.
I believe Lucid spent over $100 million on advertising, or did in last year. I can't remember the exact number, but it's quite a bit.
Nobody's really doing the kind of advertising that we're really looking for. Like someone will do an ad and say, okay, here's this feature, here's this sort of, you know, it's very surface level. I think what people have really been asking for is something that goes much deeper, that makes people want EVs, that addresses the myths, that kind of thing. And nobody's really doing that, whether it's Tesla or Rivian or Lucid or even the legacy automakers.
Well, Elon's really responding a lot in this thread.
What's he saying now?
Someone said, didn't Mercedes and the Saudis at one point keep Tesla alive with 50 million back in 2008? He said no. Daimler's 50 million investment in May of 2009 was crucial money that saved Tesla. We would have bounced payroll 1 month later. And then he acknowledges that Saudis they own like 60% of Lucid. So
I didn't realize that Elon did the cash flow analysis for Rivian, not Lucid. So he says Rivian's got 6 quarters.
So then what does Lucid have? They have even less cash than that.
and then
Is he
6 weeks.
does it mean they're gonna go bankrupt this year? I guess it depends on how their sugar daddy feels.
Exactly.
and then Elon said on Rivian, their product design is not bad, but the actual hard part of making a car company work is achieving volume production with positive cash flow.
Yeah.
Yeah. And if their inventory is that big, that's the other killer. So if Amazon can push the commercial side out, they must have incredible flexibility in their contract. And then if on their direct to consumer side, if they've got a ton of inventory, I mean, I have to look. We should probably look at it and analyze it. I can try to look it up. That would be a killer for them too. Can't have inventory. It's like people don't understand like why Tesla is so adamant about pushing those cars out. They run at an ungodly low inventory. Tesla. I mean, it's unbelievable. 15 days, and typically like a third of that or half of that is in transit. That's like basically no inventory.
Has the panel heard of a end of the quarter, end of the year delivery push from either Lucid or Rivian at the level of Tesla?
No, I mean,
No.
I've heard them. I mean, I heard them to put leasing on. I've heard them. I obviously Rivian or Lucid's cut prices. Rivian cut prices in the last couple of weeks. But in terms of an end of quarter point, I mean, Tesla's actually been doing the reverse of that. They've been getting, I mean, especially with this quarter, with putting the $1,000 reduction on in February, I think they're really starting to condition their buyers like, don't wait for the third month. We're actually going to raise prices. That's a great move from a supply chain perspective, and from a cash perspective, that's going to save them a ton of money.
Yeah, I'm just questioning kind of the urgency with quarters to go. Are there executive teams? Are there leadership teams? Is RJ, you know, ushering the troops to deliver? Or
The
yeah,
the 10% surprised me. To answer your question, I mean, that's like, to me, that's like normal like hygiene to do like 10% almost every year and like not even announce it. I mean, I would have been more impressed if he said we're cutting like 40% of the team or something, because that's what you kind of do when your back's against the wall in these situations. So I don't know if they've got a big plan of like an influx of capital coming in, or who knows what they know, right? But a 10% reduction is nothing.
I want to take the other side and push the idea a little bit more of Rivian acquisition and play devil's advocate a little bit. Okay, I know it's an unpopular idea, but Omar, let me ask you first, since you mentioned leveraging parts across vehicles. If Tesla acquired the R1 plant, okay, just that asset, and ramped production up to 80%, and replaced some parts with its own parts, used its scale a little bit more, negotiated with suppliers a little bit more. Can it get it to positive gross margin, you think?
Can Tesla make this a profitable vehicle? With
The R1,
yeah,
just the R1T and R1S.
with a lot of effort, they could, but it would be a terrible
Yeah.
idea. A 70,000 plus SUV is not going to move the needle for Tesla today. For the kind of growth the market's expecting, where you got 2 million units and they want to see you grow it to 3 million units next year, where are you going to get those million units from? You're not going to get it from a $70,000 SUV. All of their engineering resources really need to be going into the next gen platform. That shitty factory in Normal, Illinois, which, they're not adding the R2 there, they're adding the R2 in Georgia. So you've got this factory that's unprofitable, that has a lot of fixed costs, and that they've already sort of maxed out in terms of production. They're guiding that they're not going to increase the production any further. So it's not really looking like that attractive of an asset to me. It's really looking to me like baggage that is going to distract the automotive side of the business from putting the R&D into the products that are actually going to deliver millions of units of additional volume growth.
Yeah. Just consider the fact that the R1T is, it's not 100% in competition with Cybertruck. Like there's some overlap in demand, right? It's not as mutually exclusive as RJ says, but it is a traditional looking truck that people like. And R1S is an SUV, traditional looking SUV that people like. It's in line with Tesla's mission as well. A lot of Tesla fans like Rivian products. And consider the fact that maybe Rivian's impending bankruptcy, and I have no doubt that they're going to go bankrupt, okay, in the next couple of quarters, could have actually kept some demand offline. So I think that combined with supercharger network, with some little engineering, I'm not sure how much engineering would be needed, and then you put in the FSD computer in there too. It could actually be complementary and accelerate Tesla's mission a little bit too. I mean, there's a possibility there. At $1 billion, right? If the price goes down enough, I don't know. Or maybe after bankruptcy, you just kind of pick up that asset for pennies on the dollar, like we did with GM plants, right?
So what was Rivian's net loss in the quarter?
Couple $1 billion, but that's not really representative of the potential of the product. If you bring in Tesla's expertise in certain areas that Rivian is not expertise in, like for example, they had some software snafus that Tesla has never fallen into. Tesla has a supercharging network that Rivian hasn't been able to access. Tesla has viable financial future that Rivian doesn't. So a lot of complementary synergies here that really doesn't take much to implement, I think. And I'm not saying pay the current price of $10, $15 billion in no shape or form, but if this company goes into bankruptcy, you can pick up that one, plant and the two products. Because who else is going to be able to do that, right? GM can't do that. Ford can't do that. Any of the European automakers can't do that. Literally, it's only Tesla can pull it off to R1T and R1S vehicles into profitable gross margin and accelerate the mission by a couple of years, probably.
So, Rivian lost 2 billion. I'm looking at Tesla's earnings deck for Q4. They had a $2.5 billion in non-GAAP net income. That excludes the tax item. So, I mean, this thing, if you merged them, it could just wipe out the profitability of the company. So then the focus really becomes making Rivian profitable. And you can do that with a lot of work. Yeah, you can share some of the parts, redesign the products, you can decontent the vehicle, you can get rid of a lot of the OpEx and fold it in, but it's a lot of work. And it's work that the management would be doing to get what benefit really? You know, 60,000 units, 100,000 units, 120,000 units, even, 200,000 units. What's the difference? It's all sort of a rounding error at this point. What they really need to be doing is making a profitable $25,000 compact crossover and not let making Rivian work or making Lucid work or any other company work sort of their priority over that.
Yeah.
Elon commented on Peter Rawlinson, Lucid CEO, making 380 million. Elon said, "Messed up that he got so much despite a massive drop in shareholder value." And then someone said, "Wasn't he your old chief engineer? And Lucid Motors cars are pretty nice." He said, Elon said, "He was never chief engineer. I was. He arrived after Model S prototype, and then 3, he left before production started."
I think it would be a huge distraction. Tesla's already figured out a way how to streamline everything. And the last thing they really want is to pick up something else that's going to totally divert them, and it's going to be a lot of work. And I don't think it would be a great idea.
Okay, and then there are two replies. I want to just read them real quick. From Carl, there is no way Tesla would buy Rivian. Tesla would completely redesign this vehicle with a 48-volt system and structural castings. There's way too much bloat in the Rivian design, not to mention Tesla would want to build this to their own safety standards. And then Brenton Wenner says, Rivian's trucks would have to be re-engineered, and they would have to engineer an efficient production line. If they wanted to make a traditional truck, they would be better off starting from scratch and doing it the Tesla way. Buying Rivian would be a huge waste of money.
I mean, I think Elon's made his feelings on the matter clear just in his comments on this thread.
Yeah, there's no, I mean, everything you would be doing, you would be going in reverse. Usually you do an acquisition to get something, value that can help advance your core asset. And if you just look at the facility in Illinois, if you look at the cost structure of the vehicle, if you look at, is there any unique tech from a battery powertrain or, software perspective? And I'm sure there's some, nuggets in there of some valuable things, but it's not like you're going to, take out the Tesla powertrain and design in the Rivian one. And that's going to, meaningfully change your Tesla business. So like when you start thinking about these things, it's just nothing passes the common sense. Everything they would acquire would be a net drag. You would see, your COGS go up. You'd see, your inventory would go, like all these things would all be a net drag. But like do the reverse. And like, what if Rivian had, 29 billion in the bank, and, and Tesla was a much smaller company? If, Tesla with their smaller inventories, faster production times, and all of their unique IP in terms of vehicle construction, powertrain, so forth, like Tesla would actually be an amazing acquisition, but they just cost too much. So, and the same thing for Lucid. I know Lucid, they've done a pretty good job on the powertrain and efficiency and so forth, but I don't think there's anything there that Tesla isn't capable of leapfrogging in their next, iteration or release, or they may have already done it, to be honest with you. So, yeah, they're not strategic in nature. They may be more strategic for a bigger auto company, but even there, they're in a lot of trouble from a cash perspective too. So anyway, it's an interesting time. 2 years ago may have been different, but now,
Yeah, I agree with
maybe more
Jeff. If
different.
there's going to be some M&A activity here, it'll probably be from a legacy automaker. Tesla just doesn't have that much to gain. They have simplicity, they have their factories. Sort of merging another organization in is not really to their advantage because they already have such a strong EV competency. But for somebody like, I don't know, Stellantis, Toyota, even an Apple or something like that, there could be a lot more strategic value there than for a Tesla as an acquirer.
So for M&A transaction like this to make sense, you have to have a buyer, a strategic buyer, that can turn the product to positive gross margin at a minimum, and then literally lay off all the SG&A and the R&D folks and make some gross profit on the vehicles. Ford, GM, and others can't do that. If Rivian couldn't do it, they can't do that. So Tesla is the only one that has a shot at making R1T and R1S slightly, positive margin, what have you. And, let's see what Yoda has to say. Yoda?
Yeah, I suppose one other reason why Tesla might consider this acquisition is to basically, buy the founder. to get RJ, to, is he successor material? I don't think so, but you could see how tech companies could buy another tech company to get talent. But unfortunately, I don't think RJ is successor material.
Yeah, no, I don't think so either. Meta?
Yeah, one of the other big things, I'm sure you guys may have already covered this, but there's also the long-term maintenance and service center burden that comes. And Tesla has been very efficient about keeping the total amount of paints and the SKUs down. And I think acquiring Rivian would just totally destroy that cleanliness.
Yeah, I agree.
RJ did say that the R2 will have very few trims and options to keep things simple, which I think is a good move.
But you
I mean,
can't go
right
back in
away, you could
time.
cut a lot of their expense servicing their vehicles, just folding it into the existing service center and mobile service footprint. You can't do that overnight. It would probably take several quarters, but there are definitely opportunities to consolidate there in terms of their operational footprint.
And most importantly, you would get hundreds of thousands of fans overnight just because you rescued these R1T and R1S vehicles.
I mean, they still have 8 billion in cash. It's probably a little bit early to say they need rescuing, but in 4 quarters, if they can't raise, then M&A may be a more serious conversation.
I mean, it's not really M&A. It's just more like a actually like just let them go bankrupt, file for bankruptcy, and take the R1T, R1 plant. Basically, that's all it is. Just asset acquisition out of bankruptcy. Pennies on the dollar. Meta and then Yoda.
Isn't there an obligation for Rivian to find a service provider or something like that, even in bankruptcy? Like someone's going to have to service the vehicles they already sold.
No.
Aren't they required to keep a certain amount of money aside for that?
No.
I don't know.
The warranty reserve is more of an accounting treatment where you don't recognize the revenue until that warranty is, passed.
Yoda.
Just a lighthearted comment and then a serious one. Just curious, does Rivian, I guess, or Lucid have a fan base like you guys on the panel here? Like, are there spaces
They
like
have
this?
much.
Yeah.
There's actually a space, I think, but there's a few accounts that follow Rivian closely, and but obviously not to the extent
Not this
that
way. Okay.
Tesla.
All right. Well, I
Yeah.
just want to give kudos to the the group here. This is obviously an asset. Now, I think the acquisition wise, what about the Chinese automakers? Would any of them be interested in buying sort of this American company and therefore have?
Good luck getting that through a CFIUS review.
Okay.
Yeah.
Meta.
On the idea that Tesla would be acquiring the fan base, even if they didn't buy Rivian and Rivian shut down, where do those fans go when you look at the other brands on the market? If anything, aren't these former Tesla fans and former Tesla employees?
I mean, I wouldn't even say former Tesla fans. There are people who own Rivians and Teslas and keep buying both.
Yeah, there's of course some overlap, but then there's also a group of people who that are not in that group. There's also a second group. I don't know. Just an idea. I'm also playing devil's advocate, but I don't think an idea, an acquisition that doesn't make sense at 20, 30, 50, $100 billion could make sense at pennies on the dollar, and R1T and R1S have proven to have a bit of a fan base. Meta?
Are there critical supplier contracts like for materials, batteries, or something along those lines where they have a lot of that? Possibly because when they thought they were going to build for Amazon, they secured something like that. That stuff could have value. I just don't know if that's enough to acquire the whole company, though.
Well,
No.
it's enough liability is what's
No,
yeah.
No, nobody is proposing acquiring the whole company, just the R1 plant, basically. You completely get rid of the operating expenses, R&D. I mean, they might have a couple of good engineers. Who knows? I don't know, but completely get rid of SG&A, right? And then you have to have a plan how you're going to reduce the unit economics or improve the unit economics and reduce the cost per vehicle. By Omar suggested, I don't know if you were here before that, but Omar said maybe other automakers could leverage their own existing parts, and Tesla could leverage its own software, etc.
How
Meta.
much are they losing per car today?
So again, a requirement for this idea is you have to have a very concrete set of steps that brings gross margin to positive. If the gross margin isn't positive, no, in no shape or form, or if it's going to take a lot of work and divert attention from, let's say, the compact vehicle or other projects that Tesla has, then it doesn't make sense, right? If it's going to divert a lot of attention, then it doesn't make sense. But if it's a matter of just a few changes and you comes with a factory that you can, like I said earlier, one reason why the factory didn't ramp to full capacity is because demand is not there. And part of the reason why the demand is not there is because people are concerned about Rivian's future, right? I mean, just imagine the people back in the day in 2017, 2018, they were buying bolts because they thought Tesla was going to go bankrupt. So the same goes today for Rivian. And the leadership wasn't there. As Yoda pointed out earlier, it's a matter of leadership. But that's the beauty of this idea of acquiring this R1 plant out of bankruptcy, is that we have the leadership that can make it work.
Yeah, I mean, it's basically a terrible idea.
Yeah, I
Meta.
was gonna say, like, they already have another plant they're gonna make in Mexico. They're already going to this new approach of making vehicles that are unboxed to the unboxed design that theoretically they can make a truck that looks very similar to the Rivian. I don't know what the value of buying a plant and redesigning how the entire plant is to make the vehicle more efficiently. Because at that point, all you're doing is buying the design and some real estate with responsibility to like make that particular design with that particular real estate. I don't see the value.
Yeah. Like I said, if it's going to involve a lot of work, like you said, redesign the entire plant would qualify under a lot of work, then it doesn't make sense. Yoda?
Yeah, I was gonna say also a large part that we've seen with the choice of plants and building a plant is that it's an opportunity to negotiate for benefits with the local government. And so, I think if you start from a blank canvas, there's more leverage to negotiate with that country or with that, with that state, rather than, picking up an existing plant for cheap.
All right. We have a new speaker coming up. Chris?
Hey, Tesla's never going to acquire Rivian. That's just a terrible idea. They would never do that. Um, Rivian, if anything, if Rivian truly runs out of money, doesn't do another raise, doesn't get a foreign investor or new investors, they will part it out. Right? It's IP. To your point, like you can't recover some of the stuff. They're not going to buy the factory; they'll buy the IP. So the big one is Amazon, right? So Amazon has 10,000 vans. They're not going to just let die because Rivian is gone under. They will buy some way to support those vans and or expand those vans. Who knows? Um, Amazon is going to be the biggest investor, most likely in a trouble situation for Rivian. I just don't see. Could see Amazon like parting it out and saying, okay, the R1, someone can buy that maybe, or just let it die. But they would absolutely continue to make the vans, or at least provide parts and service for the vans. I think that's their best hope if they truly run down to zero. Right now, they're guiding towards Q4 being profitable, a gross profit. Um, we'll see if that happens or not. I mean, a lot of what we saw in this last quarter was due to Amazon having what is considered the busy season, right? Like Thanksgiving to Christmas. They just did not want to mess with that, so they didn't take delivery of a just absolute pile of vans. And so that was like a $100 million hit they took from Amazon alone, not taking delivery. And then RJ did an interview with Jim Cramer, and he basically said, "Hey, we're burning down that stockpile of vans. Amazon's taking them delivery now in January." So I would expect a higher number of Amazon delivery vans in this quarter. Maybe we see less of a loss in this quarter and going forward. Rivian's certainly guiding toward that. So um, I don't know. I think they'll look a lot better later in the year. Will they run out of money in 6 quarters like Elon's saying? I doubt it. Um, if they can turn it around, they really just need to make it until the R2. That's their Model 3 moment, right? That's when they're gonna go from selling a very expensive truck to a affordable truck that your parents could buy, right? And so that's their goal right now, is how do they make it to 2026 where they can deliver the very simple, I'm going to say affordable, $40,000 to $50,000 vehicle isn't affordable for most Americans, but more affordable vehicle. Um, right now, having a $90,000 truck with interest rates at 6 to 8%, depending on where you get it, every vehicle is
Okay.
becoming
Chris, let me ask you a
unaffordable.
couple of questions.
Yep,
Question one, what do you think is the probability of a Rivian bankruptcy in the next 12 months?
12 months now. I mean, based on Elon's tweet, even like points it out, like it's 6 quarters, right? So you're looking at a year and a half. Very low for 12 months, unless they just stop selling everything. And then yes, absolutely in 12 months.
Okay. And then what do you think is the probability? Let's say Rivian did go into cash problem, liquidity problems. What's the probability of Amazon acquiring Rivian at that point?
I don't think they'd acquire Riven. They'd acquire a piece of it. They'd acquire whatever it takes to service their vans. So
Oh, just
I'd
to
say
service the
pretty low,
fence. Okay, got you. Just a couple of
pretty low.
service centers, basically.
Yeah, Amazon gives zero shits about the R1.
Right. Okay, Meta, did you have your hand up?
You asked the question I was going to ask.
What was it?
Why would they acquire the company when they could just acquire the small amount or use the existing vehicles they have to service? Like if they have 10,000 vehicles and one of them breaks, they could wait till another one breaks for different parts and just salvage themselves.
Yeah.
The problem is they don't have a ton of vans. They have them peppered throughout the country, right? So they might have like 50 here or 100 there, and I just don't see that as like a viable option. The trucks themselves are pretty good. It's the drivers being terrible, right? The drivers crashing into stuff. That is their
But
biggest problem. The mobile technicians
yeah.
actually service the vans, and so they would have to hire a whole fleet of mobile techs to service the vans every morning, like they do right now.
Okay.
For them, it could also
Just
just be a sunk cost. Oh,
before that, Rivian Tracker is in the audience. If he wants to come up, request to speak, please. I also sent an invite, but sometimes that doesn't work. So if you want to come up, just request to speak. Meta and then Yoda.
yeah, I think that's falling into sunk cost fallacy. I think if you're Amazon, what is it, $500,000 that they spent on this? However much it is. I'm not sure if I'm doing the math right, but whatever the cost is, they can continue to extract whatever value they can by running the fleet until they can run it. And when the fleet becomes too expensive to run in terms of maintenance costs, they can just stop running it. This isn't that vital to Amazon's business.
Yeah, I think they've started buying some vans from GM as well, some electric vans. So
Right. Yoda?
Yeah, if I'm Amazon, the kind of van that I want to invest in is not only that it's an EV van, which saves costs on fuel, etc., but that it has a clear path to autonomy, so that I don't have to pay that driver or have the driver make, obviously there's a certain accident rate. And so perhaps Amazon realized that the path is with a different maker, Tesla or Chinese automakers or GM. But I think the right van for Amazon is one that has a clear path to autonomy.
What's the timing going to get you in a van though? It's just going to get you to the destination. You still have to take to somebody's porch. So um, I would
I
agree
think
that
one company is making a bot that might do that final step. But yeah,
okay.
I agree. Yeah.
Right now, I think Amazon's biggest reason to keep the van is because they have from a Rivian is because they've basically built a fleet management software around that vehicle. Like that vehicle and the software was built specifically for Amazon. Like if they buy something from GM, we've seen what the GM software looks like. We've seen what the Ford software looks like, and the Rivian software is impressive. They've really invested a ton of money in that fleet management software, and that's why a lot of the other companies are piloting this year. You know, like we're seeing new companies coming out where they're piloting, taking the EDVs because the fleet management software is so good, and because the vehicles are obviously EVs. But I don't. I think that's Rivian's biggest selling point to Amazon is we have got the software. All you'd have to do is just add another vehicle to the fleet, and it's pretty simple. So
Chris, have you invested in Rivian?
I have not. They tried to get me to do it at IPO, but I thought $70 is too much, and I would have been right. I just like the vehicles. I like the Tesla vehicles. I like the Rivian vehicles. I talked to both of them. I'm just a fan of both vehicles. So I have a Model S and I have an R1S, and I've had 3 Teslas to date, and I have a Cybertruck order, but it's too expensive.
I mean, I know they're not union, but I mean, could the federal government? I mean, the federal government has thrown Ford, GM, and Stellantis over $20 billion in the last year through the Department of Energy and just various different loans and some grants. So, I mean, that could conceivably happen too. I mean, they could take a loan from the government or a grant.
Does Rivian have union labor?
No, but I mean, Tesla didn't have union labor either in the beginning. They got a loan, so I don't think it's out of the question. But yeah, it's interesting. Yeah, maybe Sean Fain can go in and fix Rivian with union labor. Maybe you should go in and figure that plant out.
That would be the fastest way to kill Rivian. I would if they unionize, I will take back my statement about it being dead in 12 months.
Eat the rich, eat the companies that still have any cash left. I think it would be a tech if they were going to get acquired. To me, Apple. I don't know. Apple does not like acquiring factories.
They don't like acquiring
So
anybody, especially of that
yeah,
size. It's not really their style, but they're one of the only few companies that actually has the cash pile and the interest to do it.
You know, what would make a lot of sense would be for Rivian to become like a Foxconn, building EVs for other companies. They've got the factory, they have the labor, and they know how to do it. I could see them doing that with the R1 line if push came to shove.
no. The problem is their capital structure. Like they don't have a factory that runs at an efficient enough rate to turn a profit. So I don't know if you just put pure volume into it, and there's not enough. That's the thing. Like who would be doing that, and how you'd have to fill that up to a point where, and you'd have to get leveraging in the procurement structure as well. So there's a lot to that. To me, if you're going to be a factory that does that, you have to have some sort of like demonstrated like capability and efficiency. And quite frankly, I just don't think, I know Magna's out there. I just don't think that model is going to work well very long, because what the auto industry is about to go through now is this massive pivot of we've got way too much capex, and people are not buying cars as much as they used to because they last a lot longer and they cost too much. So I don't think inserting a what do you call it, a CM model, a contract manufacturing model, wedging that in the unit economics of building a vehicle, I don't see how it works anymore. I think look at Fisker right now. They're using Magna, and I'm sure that is just I'd hate to be in those meetings right now talking about liability and talking about obsolescence, and that must be a train wreck right now.
We may be dancing on their grave a little bit prematurely. They are certainly trending towards bankruptcy right now. That's clear to everybody. management would even admit it. They used to be supply constrained. Now they're very demand constrained and they're keeping supply flat. But zoom out, and literally every other EV startup is a complete joke or a fraud. This is the one that I would actually recommend to people. You notice the gross profit loss on their vehicle, it's actually going down compared to even Lucid, which is also one of the better EV companies. And they're actually losing twice as much money as last year while making less vehicles, right? So we can't forget really what an incredible task it is, just from a marketing and product standpoint to even find the success they have. But as Elon points out, there's a huge difference between making a product people love and building a business that's going to produce cash sustainably.
Yep.
Interest rates are just
But
really
there's,
killing everything right now. That I mean, look at Ford's being
yeah.
killed too. I mean, the interest rates are so expensive vehicles, interest rates, and high payments. That's what it comes down to, right? Like you can't like you're not going to tell a 20-year-old average 20-year-old to go buy a Rivian. You're going to tell them to go buy a Bolt, right?
I
Or
mean, there's a lot of value here for somebody at the right price. So if I'm RJ and I come to, let's say, Tim Cook or, you know, the CEO of Volkswagen or whoever, and I say, look, here's my plan. We're going to cut losses. We're going to get the R1 series gross profit positive this year. We're going to sort of manage the expenses there. We're not going to put too much into continuing to ramp up. And here we've got the R2. Let me tell you how I can get it profitable within, let's say, 12 months. This isn't going to cost you more than, 10 billion or something like that. For somebody, maybe it could make sense. Somebody who really wants to get into this market. The bigger thing is capital markets have just soured on the whole EV theme. So, who really has the courage to get into this at a time where the narrative is EV growth slowdown? And, you know, to really put a big bet in here and say, no, this actually is going to be really strategically important. And we're going to get into this and spend billions of dollars on this because let's face it, this is the top non Tesla EV brand in North America.
I think some of that EV slowdown also is due to gas prices coming back down again, right? Like there was the whole panic. People panic when gas hits like 3 something and 4 something a gallon, right? And so that gas got down to 2 something again. And so hybrids back in, people buying freaking Priuses, um, but less consideration. People consider what they pay at the pump. And when the pump prices come down, people buy less EVs. So we've got some trouble in the Middle East. So I don't know. Maybe gas prices go back up again and EVs come back in a second wave. But interest rates are what are really driving the lack of sales for everybody. EVs just happen to be more expensive in general. So higher interest rates on those as well, higher payment. Who wants to do that?
The primary issue Rivian had has nothing to do with interest rates. Their engineering is not good. Their vehicles are overweight. Their costs are high. Their strategic plans are wrong. None of that has anything to do with interest rates.
Inventory's high.
Yeah.
Yeah.
Omar, do you want to say anything about V12?
Yeah, I mean, some of the feedback and reviews and videos we've seen from the early testers seems pretty good. So it's pretty exciting, I think. A lot of people are very dismissive of this technology despite there just being incredible progress. So I think this is really going to shock a lot of people. Nobody's really expecting this. And, people are just kind of hyped. It may be a little bit of a honeymoon period and they may calm down a little more, notice more of the issues. But I mean, you just read the tweets for yourself. People are really excited. They're seeing it do things that they haven't seen it ever do before. They're saying, oh my God, I had an issue with this for years and suddenly it's working. So this is not only a great build of V12 that people already have, and we know there's another 12.3 coming. This is a paradigm that I think is really going to achieve the results we've been looking for in a way that the old architecture just didn't. So I think it's looking pretty good. I wasn't really sure what to expect. I was kind of thinking, okay, maybe outside California, it won't be as good. But no, people all across the country, people in different parts of the city, urban environments, rural environments, they all seem to be pretty impressed. So, people are talking about it parking, circling around the block, parking in a driveway. Um, yeah, I just am really excited for this to continue to roll out to everybody. I think it's a much bigger deal than people make it out. People are very dismissive of it. They say, okay, it's not going to be material. It's not going to make a difference. I think it could be very material this year, actually.